guys, welcome back to another episode of the Web3 Quick Bite podcast, the podcast where we jam to the latest beats in the decentralized world and chat with some of the brilliant minds in the Web3 industry. I'm your host, Olabisi, and on today's show, we are going crypto deep with our guest who has truly cracked the code on understanding this wild market. We're talking investor behavior, on-chain data, and finding those money-making insights before they hit the front page. Joining me is Joe, CEO of LunarCrush, the leading analytics platform for digital asset intelligence. Joe and his team are like the Sherlock Holmes of crypto, studying every transaction and social signal to identify the real value behind these decentralized assets. Unlike traditional markets, crypto never sleeps, and there are no centralized earnings reports. So the value comes from the global communities buying, selling, and speculating on these coins and tokens 24/7. And that's where LunarCrush comes in, processing massive amounts of data to spot trends and movements before they happen. So get those notepads ready because Joe is about to take us down the crypto rabbit hole with his unique perspective from years embedded in this space. This episode is going to be seriously insightful and maybe even a bit mind-blowing. So, ladies and gentlemen, join me in welcoming Joe to the show. Hi, Joe. It's so great to have you on the show today.
Hi, Olabisi. So that was an awesome intro. Thank you for that. It's nice to get to hang with you today.
Awesome. So, how are things going over at LunarCrush today?
Today, specifically, the market's down a little bit. Bitcoin's taking a little bit of a breather, but as to be expected in such a wildly bullish market over the last couple of months here after the Bitcoin spot ETF approval. But things at LunarCrush are going great. We've been building throughout this bear market and staying focused on building an awesome brand and an awesome business that provides insights to our users around what all the communities look like across all these different cryptocurrencies. We started, I was Bitcoin class of 2015 and, got obsessed with the market over the just cryptocurrencies, Web3 in general over those next couple of years. And we launched LunarCrush in 2018 and, our first beta came out, 2019. And so we've been in this market for a long time. We've been through a lot of bear markets and bull markets. And our focus is always on building awesome products that create transparency in the market and create transparency on the internet for investors. And so, things are going really well and people are coming back to crypto a little bit as these prices have moved up.
Yeah, awesome. People are coming back into crypto. Everywhere I go on Twitter now, I'm seeing someone talking about a new coin, new token. I'm like, okay, you guys should give me a breathing space. I am not going to put all my money to buying everything. You guys should stop already. Well, you just answered my next question because I was going to ask you that, okay, how did you get into the decentralized world? Was there like a specific aha moment? Okay, I think this is right for me and I really need to go into it.
Yeah, just to touch on your comment right there. Yeah, there's about 15 meme coins being launched every single day, just on like Solana alone. So, it's impossible to, how can you invest in every single one? And maybe you probably shouldn't. But yeah, no, for me, my career started in 2008. And that's when, we had the Great Recession here in the US. And looking at all the different banks, that was what I wanted to do. I was a finance major at university and I was focused on working on Wall Street and potentially working at an investment bank. And, by the end of 2008, those, some of the banks that I wanted to work at, like a Lehman Brothers or a Bear Stearns, didn't even yet. These were over 100-year-long institutions in the US that, created tons of value and, were the massive holding companies and, they're just gone. Right. And that was just such a shock to me as a 21-year-old coming out into the world thinking, wow, the things can really change. Right. And what you think is going to be there forever, when you're a kid, you kind of think that like the world is a certain specific way and it just kind of keeps growing and the things that are there before will be there in the future. And then as you grow up, you realize like, oh, wow, the ground can really shift under your feet when it comes to decision making. And so I was really kind of, I think, molded from that era into thinking a little bit of a different way and, wanted to try lots of different things in my career, right? I've worked in advertising, I worked at a building materials company and doing sales and channel management. I've, worked on different user experience roles and UX strategy roles and, helped write strategy for a Super Bowl commercial and built apps, for a large automotive companies. And so, it was kind of wanting to just try everything. And, I think when you are early on in your career, you're trying to figure out what your passion is, but you're also just trying to learn and try new things and see as many things as you can so that you can really kind of find what your niche is. And so when, I heard about Bitcoin, my co-founder now, John, he asked me one day and we were working together and he said, "Hey, do you have any Bitcoin?" And, that was like the beginning of the rabbit hole for me. I think I got my first Bitcoin, at like $195. I think I always say this, but I think I sold that one at like, 160. So my first, trial into crypto was, probably a $30 loss, but it was an exciting thing. It was this intersection of technology and finance. And that was what I was always interested in. I grew up playing a lot of different games, and like at the early days of the internet. And, I was one of the first people to have like cable modem, in my neighborhood. And so me and a couple of other people that had fast internet, were joining up playing things like Rainbow Six or EverQuest. And, it was just always kind of deep into these guilds and different places across the internet where you're just like trialing things. And, you had to do all sorts of little tinkering when you were, I was helping, when you had like a clan in Rainbow Six, we had all these cool graphics that we were creating and like motion graphics, on Flash, Macromedia Flash. And so it's just that's like the internet meme culture that's around today. And then, as you grow up, you mature a little bit and you start to kind of figure out like, okay, like there's this mature, like more money oriented world out there. And that's where I kind of got, obsessed with, trading or markets. And, it was mostly like macroeconomics versus like pure trading. Like I loved the way that you could kind of think about the economy and what was like pushing and pulling and how one thing affected the other. And so finding Bitcoin and then, when Ethereum came out and all the tokens started to kind of proliferate out there, it was like, wow, this world is being built and we could have potentially the tokenization of everything. And so, I was like, I need to be building something in this space, right? It really, it was so new. And I as an outsider, anyone that's in the industry, that's now in the industry that wasn't before, it's like as an outsider, it's like you just don't feel completely part of it, right? And so for me, it was like, how do I challenge myself with trying to actually build something in the space? And that's how I would become an expert at something. And so that's what we did. And, John and I and Dan started to kind of build and we just started to kind of figure it out. And next thing you know, we got a little company that we started and, you take a leap of faith and, leave your day job and start building a startup and, the rest is history. And now here we are with LunarCrush and we've been, in business for half a decade, 5 years, which is a crazy amount of time in Web3.
I mean, that's quite a journey. I'm also saying that you've had a rich and diverse career history. And one thing I always love to hear is that I love to hear people's stories on how they got into the space, because most people, they started out by learning about Bitcoin before going down the rabbit hole of Web3 and say, okay, I think maybe there's a place for me here and I need to build something in the space just like you did. Stories like this really warms my heart. I like to hear diverse stories of how people got into the space. I mean, in my own case, I started out by, I think it was Bitcoin. The friend told me about it. I said, okay, so you mean I can buy something online and I can convert it into real money? It just sounded so far-fetched then. But then when I got into it, I was like, okay, yeah, maybe there's actually an opportunity here for me and other people to can also come in and join. So it's just quite an experience for everybody who found themselves in the Web3 space. So this is going to bring me to my next question. You founded LunarCrush, right? But during the early days, how did you go about educating people on why crypto market insights were so valuable?
Well, We kind of created LunarCrush to solve that problem for ourselves, right? Like we were out there on Twitter looking for different projects potentially to invest in. And, in the early days, there was, we still had like CoinMarketCap and CoinGecko, and those were like the two things that were out there. And, they would show you what the market cap was of these things and, where to find like the contract ID. And, but for us, we needed to go deeper. We needed more. And when you look at cryptocurrencies, unlike traditional stocks that are out there, like a company in a stock has, they have a CEO, they have founders, they have a board, they have GAAP accounting, they have earnings reports, they have all these ways that you can kind of delineate value and understand, hey, what pushes a stock up over time? Sure, speculation, but really it's just, earnings reports beats over time, just kind of consistently push these things up, or stock buybacks. And there's really a traditional way to understand this value. And in cryptocurrencies, even something specifically like Bitcoin, sure, there's wallet addresses and there's some fundamentals that are there. It's like you got the halving coming up and there's only 21 million Bitcoin. And I think that drives a lot of the narrative, but there's this other aspect of it that, we ended up learning a lot about with, Wall Street bets and GameStop and what went on there, which is retail folks are here and the Robinhood era is here. And, LunarCrush started, a couple of years before that even happened, because we were focused on, hey, community is really what drives, the speculation and the narrative for some of these things. And if you've got a large community of people online talking about these things that are passionate about it, how many individual and unique creators or influencers or KOLs are now talking about a specific project, right? And people, when they're out there talking on social media, they're talking their bag, they're talking what they're holding, and maybe they're part of that community in some way, or they work with that community, or they're part of a meme community. But, there was really no way to kind of categorize or compare the difference between all of these different communities in Web3. And so for us, we were like, how could we pull some of this data and make it very simple for people to understand? Because when you're out there on Twitter, even, you can't possibly, if you're following, even 5,000 people, and you're not going to be able to understand the signal there, right? You're just going to kind of see some of the people and like, you're going to see less than 1%, what's happening. I think Elon the other day said that there's over 500 million posts a day. Like, you're not seeing, you might see, if you're hardcore on Twitter, you might see 40 posts that you're engaging with like an hour, maybe more. If you're super obsessed, it's like, that's not close to 500 million, right? And so in Web3, there's, sometimes, we're pulling millions of posts across these networks, and all the news that's out there. It's like, how do you really understand what's growing and what's shrinking? And so that was really the nugget for us was, hey, we would love to understand this for ourselves. Let's go build something that makes sense for our use case, and hopefully people will like it.
Yeah, awesome. So I just want to ask that, okay, as LunarCrush was just getting started, what were some of the biggest challenges you faced, and how did you overcome them?
Yeah, I mean, whenever you're starting something new, there's a fear, right, that you overcome. For me, I've worked in startup before as an early co-founder, junior founder, early employee of another startup, and went through a TechStars program. And so I kind of, I think sometimes you just kind of feel like you've got it ingrained in you to take those risks and to take the leap. Listening and, being in the industry, you just you start to kind of build up a little bit of an understanding that, what is the actual risk that you're taking, right? Like, I tell this to early founders all the time, that are thinking about potentially starting their own thing, or maybe going and working for a consulting company or something else. So you got someone that's really smart, that's entrepreneurial. I think the big thing, that I learned from my first go at it was, hey, you go work for a startup for a couple of years and then you re-enter the workforce, and you are 5 years ahead of everyone else that's kind of in your peer group with your understanding of how business works and what's important and what drives, things forward. And so when it came, time for LunarCrush again, it was, even earlier than that, I kind of knew. I was like, I got the itch again. I was like, I need to go build something. That's who I am, right? I need to go out on my own, and I need to see if, I can actually make something happen, right? And it's this internal thing that I think is in some people, that it's like, you just want to kind of throw yourself into a challenge of something. And I, being crypto and Web3, it was like, I knew nothing about it. And then it was like, how do I put myself into like the hardest situation possible, and then kind of dig your way out of it? And I don't know what that is. I don't know why I have that gene, and like some people do. It's like, it sounds kind of crazy, I think, to some people to say like, well, why would you just go do this? I was like young, I was trying to start a young family. And even in the face of all that, it was like, well, I kind of know the path that I'm taking across, a corporate landscape. It's like, okay, like, you just work really hard, work more than other people, you know, continue to work your way up some sort of corporate ladder. And like, I felt like I knew exactly how to do that and knew where I could go. This other direction, I had no idea where it would lead. And so it's like, as an entrepreneur, for some reason, you choose that direction. You just choose the one that you have no idea where it's going. And that's just, I think, part of, what's in some people. And so I tell people, though, it's like the risk. It's like, even with LunarCrush, it's like it at the beginning, it's like maybe you thought there was like a 5% chance or less that it would be successful. And every startup's that way. The majority of startups fail, but what you learn is invaluable, and the skill set that you get is going to catapult you forward no matter what happens next. And so you just kind of find the solace in that, to where you know that, okay, this is the right decision. And yes, some parts are going to suck along the way, and it's going to be really hard, and you might have a lot of anxiety, but the outcome is always going to be better on the outset.
Right, awesome. That was quite insightful. Thanks for sharing that. So, you've built an impressive team at LunarCrush. What's your approach to fostering innovation and collaboration amongst your team members?
Yeah, the team, you try and hire people that are passionate, and are focused on what you're doing. I think it's hiring people that are even already a part of your community in a way, that are fans of what you're doing. I think that's where we've always found a lot of success. It's like my dad used to always say, show me bright-eyed and bushy-tailed, and I'll show you success, right? And I feel like that's kind of the mantra that I live by with, it's, even if someone doesn't have the entire skill set at this very second to be, super impactful with, the business on day one, right? I'd rather find someone that's extremely excited and passionate and wants to work hard, and then that person can learn very quickly. And then if you actually care about the people that you hire, you're going to spend time teaching them. And those people always end up being the most successful, and the people that you really want to drive your business forward. And so I think that's kind of the mantra that I stick by. And then, when you have a team that's together, you're really just trying to, keep the communication levels very high between everyone, especially when you're all remote business, which a lot of people in the Web3 space are. It's very global. If you've ever been to some of these conferences in our industry, you realize like, oh my gosh, there's people from all over the world at these things. And, those are kind of like meeting places, and there's just tons of business development and everything that's done, because those are the only times that we actually see each other. So I think, it's fostering a lot of communication, inspiring people to, hey, take some time and just like reach out to other people on the team. If you're utilizing Slack, just do a quick little huddle and, see how people's day is going. Because I think, the problems start when there's silence or there's unknown, right? And I think it's because inherently is like humans, if the communication is not high, it's like what you can kind of come up with in your head is way wilder than what's like the actual reality. It's like if someone's not calling you back, right, you might in your mind think like, well, are they mad at me? Or, did I say something? Or, maybe they don't want to be friends anymore, all these things. And then like they call you and you say, what's up? And they're like, oh, sorry, I was just like at the gym. Right. And so I think it's like that kind of extrapolates out like in business where, maybe someone is, in a meeting and they don't say anything. And then someone's like, oh, are they upset? Or, maybe they didn't like what I was saying, or like, man, that person isn't, very communicative, and it's not very conducive to a great team environment. And then, maybe you go have a conversation with that person, and that person's, oh, I had, maybe my dog passed away the other day, or, I was just, I was having like a really bad week. This thing was happening. And then the next week they're fine. Right. So I think it's really kind of heightening that communication as much as possible between team members and keeping people focused on the mission of what the outcome that we're trying to achieve is, right? There's a couple of different types of, I think, the way that people operate. There's some people that are like, just tell me the task to go do it. I just want to do it, and just keep telling me the task. And then I will keep knocking those tasks out at a very high rate. And that's the way that I want to work. And then there's some people that are like, I need to know the outcome of what we're trying to achieve here, or I can't even function, or I can't even do the next task. So I think it's also understanding the type of person that you have and the way that they operate, and then communicating at that level so that you can get the best out of people.
Right. So I would say the secret now is communication and understanding. Is that correct?
Yeah, just like you can't go wrong if you're communicating at a high level and people are passionate about what's going on. Obviously it's like you want to keep people challenged as well. I think if things get monotonous and, people aren't challenged, then, high performers will tend to kind of fall off. And so how do you keep people challenged sometimes is also a big piece of what's going on, and it's tough sometimes because sometimes it's like, hey, we need to do this very basic thing that, is the thing that's going to make us, more money on this one product, what we're doing. Like, I just need you to help with that right now. And that's where we're at. And so, that's, I think, the ebb and flow though of just business and, keeping really good talent. And then, how do you keep them challenged? But yeah, communication is paramount.
All right, great. So as a follow-up question to that, would you say that it's effective to hire people who are willing to learn on the job than hiring experienced people? Or would you say there should be a balance?
It's a balance for sure. But I also think that, how do you find someone that's experienced, but then also still passionate, right? Like that's kind of the best of both worlds when you find someone that is, willing to be pliable, especially at a startup when things change so rapidly, right? We could pivot the entire company in one meeting if we need to, right? And then the entire mission is changed, and, there might be some things that you were working on that are now throwaway, but that's just the environment. Like, startups are hard and you need to make pivotal changes, sometimes on a dime. But I think depending on the work that's going on, right? Like, experience is great. Like, and there's a lot of value that can happen there. I think with very small teams, it tends to be, it tends to be younger teams as well, just because the risk factor of that, you're not seeing too many folks that are in the latter part of their career taking a lot of those risks. And so you kind of end up with just the talent pool of people that are willing to work at a smaller startup. But, I think the passionate side of something and having people learn on the job, is a great place to be for a lot of people if you're a founder and a CEO that wants to contribute and to work on those people and to kind of foster and create that next generation of talent. Where some people, I think, maybe they do just want to hire some people and then kind of sit back and say, hey, like, here's what I need to get done. And then there's also the side of it where it's like, you need to diversify the talent set for what the product is that you're actually trying to build, right? Like, you probably shouldn't be hiring, 15 marketers if you are working on a software company and have one developer, right? Like, you need to balance that out and figure out how to correctly build awesome product, but then also get it out to the world.
That's right. Because for most founders, they want to hire experienced people because they don't really have the patience to start teaching people to do their job, and especially in the Web3 space, because the industry moves very fast. Most people don't want to bring people who they have to train, people who they have to teach, or having to learn on the job. They just want higher experienced people in this space. And then, I mean, everybody, we're all just finding our way in this space. I don't think there's someone with 15 years experience in Web3. I don't know if I'm wrong. I don't think there's anybody with 15 years experience in Web3. Everybody is still learning. But I understand that founders have their preferences of who they want on their team. But one quality which I agree with you is that to find people who are passionate about your startup or your project as you do. I think that's the one quick key quality that founders should look out for. Right. So no,
You don't need to necessarily hire someone with a, like, I don't see it as like having to spend your entire day training someone. It's more about, giving that person an outcome and saying, even if they don't have a ton of experience in something, saying, hey, we really need your help in, getting this newsletter stood up. Right. And so it's like then that person, and maybe they've never done a newsletter, right? Like, hey, have you done a newsletter before? No. Do you think you can do it? Probably. Okay. Hey, go stand up a newsletter for us. Right. And then it's not the management team or even the manager. You're not hand holding that person and telling them and micromanaging them and telling them exactly how to do it. Right. If they have a question and they come back to you, sure, here's how maybe I would do that. But really it's up to that person to be challenged, and then they can go figure it out themselves. Right. There are so many resources out there to figure out how to build the newsletter where they could just go figure that out on their own. And then they come back and now it's suddenly like, oh, they taught themselves how to do a newsletter. Right. But maybe they would have never done that on their own. It's like they're not just going out and teach themselves how to do a newsletter randomly. Right. It needs to happen on a job somewhere. Right. So it's like just hiring someone that you think is capable and then giving them tasks that maybe they have not done. And then suddenly they've done it and now they're good at it. And now you have a resource. But I think that you shouldn't be sitting there and thinking, oh, I've got to spend all this time teaching this person how to do this. Now, if you tell someone that, hey, this is the outcome that I need, and they actually can't do it and they're struggling with it, like maybe they were just too green and, they need to go figure out a couple more things, or maybe they weren't capable of it and they're just not apt to work at your business. But, I think it's outcome driven training and then supporting them along the way and saying, oh, being there for questions, not just ignoring it and saying like, oh, like, why isn't this newsletter ready yet? It's like, no, like, hey, here's maybe, an hour out of each day that I can kind of help with something like that.
I completely agree with you, and thanks for adding that. Let's talk about some crypto trends. What's a recent insight LunarCrush has uncovered that you find most intriguing?
Some recent stuff, I think as the market started to come back, we were paying very close attention to who are the people and what is driving most of the buying and the lift in price that we've been seeing. So we've been keeping an eye on, do we think that the retail market is back in crypto, right? And so, I think what we've kind of uncovered and what we've seen is that, the increase in prices has happened, but a lot of this is still driven by what we're kind of call like the more hardcore users in Web3, the people that, are very close to, maybe they own a couple of NFTs and they're part of an NFT community, or, maybe they worked in Web3 for a year and now they work somewhere else, but they're still very close and they, have a Web3 wallet that's out there that has, a little bit of Ethereum in it or whatever it may be. Like, we think a lot of the drive into the prices is driven by those people. Obviously, on Bitcoin, it's all, mainly the spot ETF narrative that's out there, and Wall Street now kind of buying into that, and everyone's paying attention to the inflows and outflows of that spot ETF. But the rest of the market has also moved. And so, that is, we would say like industry kind of hardcore driven retail folks. I don't necessarily think that the kind of what we call like the pure Robin Hood, more like a white collar worker or someone that is speculating and, maybe they work at Google or a tech company or they work in some other industry, they're probably not dipping their toes in as much just because it happened so quickly, but they will. And so that's kind of what we've been paying attention to. Obviously, I think that there are more retail people that are now driven in. So yeah, that's really what we're looking at, is that, we could just be at the beginning of a very major run here in the market. It's really healthy, I think, to see the pullback and the correction in the market that we're seeing today. Bitcoin down to 63,000, which, it was just too much of a fever pitch that was going on. Maybe we see even more of a correction. But really, we're trying to understand the next kind of big narrative that's out there and what's being built, right? Up until right now, like in this market, we just have a Bitcoin spot ETF that's new. Everything else is pretty much the same. We've got, Solana and BNB and XRP and Avalanche and Dogecoin and Shiba Inu and meme tokens are being launched, right? There's nothing really net new that we've seen that I think is having like a major impact. And that's like the next killer app that's going to bring that outside retail back in.
Right. So I have a follow-up question to that. I mean, you've experienced several bear and bull market runs, right? Do you think this bull market is going to top other previous bull markets in the past, or it's just the same bull market run that you've experienced before?
I mean, in some projects, it is the top of the top that they've seen, right? Bitcoin hit an all-time high. I think looking at something like Solana, the all-time high was like $258. It's sitting at 179 right now. And so some of those projects have not seen all-time high. I think it's going to be, not all bull markets are created equal. I think we'll definitely see something a little bit different here with what we're seeing right now. It's Bitcoin leading the rally. It happened just insanely fast. We had over 2 years, it was 2.5 years of a bear market, right? And to think that, we're going to have just a 45-day bull market and then back to 2.5-year bear market, man, that would kill a lot of people to have to go through that again and only have 45 days of going through that. I think we're still early on it. But yeah, it's just going to look different. They all are going to look a little different. It's kind of like, history doesn't repeat itself, but it rhymes. I think this is going to rhyme a little bit where, Bitcoin's going to run. We're going to have the halving here in April, and then you're going to start to see the rest of the market really kind of push up, maybe even past it, and have some kind of parabolic days that are out there. But again, like I'm looking for what's the difference in what's being built, right? Like a lot of the infrastructure this time is being built on the Bitcoin layer 2s. So that's a kind of a new side of what's going on, but it's just a rebuild of what's Ethereum already, but it's happening on Bitcoin, which, obviously it's like, hey, if we could all be building on Bitcoin, like that's probably where we should all be building in some sense. And so I think that that's something that will continue to push. But again, what's being built on top of that, that's really innovative for this cycle. Like we haven't seen that yet.
Right. So I actually saw a tweet, or I saw a tweet this morning, and the person said that this is truly going to be the shortest bull run ever, and that even the Bitcoin halving is not going to do anything to fix it. That it's probably going to last for maybe 6 months, and then we're back to the bear market again. I mean, I found out funny because most people have been waiting for this bull run for like forever, since 2022 when the market crashed, and then we had to wait it out to this current period that we are in. Do you think this is going to be the shortest bull run ever?
I hope not. But you just don't know. And there's a lot of macroeconomic things that could kind of get in the way. Like rates are still very high. It's in many countries, and it's difficult to find lending at a rate that makes sense to kind of spur the economy in a meaningful way. You still see a lot of money changing hands and people buying homes, but just not at the rate that we've kind of seen before. And so really, to kind of damper inflation, they're trying to keep these rates high, and they're, part of that, it's been stated, by the Federal Reserve, at least here in the United States, that they actually want, to, lower the job market. They want, in effect, for people to lose their jobs so that the economy slows down, so that we have less inflation. And so I think we're starting to really see the effects of this, prolonged interest rate hike that's out there. And I think that they're going to hold it as long as they can, until the market really bleed. So before they start to lower rates and we see a kind of reversal. And so Bitcoin and the rest of the market has really rallied in the face of that, which is, pretty incredible if you think about Bitcoin going to all-time high in a market where you can get 5%, just in your, in a money market account, risk-free. And so, when they take their foot off the gas with the interest rates, and those interest rates start to come down, that 5% money is going to go somewhere. And where is it going to go? It's going to go straight into the market, straight into things like the Bitcoin ETF, straight into, potentially altcoins and, meme tokens and everything else where people are looking for other value. It's going to spur the housing market as rates come down, and the housing market's going to move, and then people are going to have big chunks of change that they could potentially spend on a new house or pay taxes and then, spend it somewhere else. So, they're really trying to hold on to this thing. And so, we will have, I think, we're going to be in like a no man's land for a little bit here as, the steam comes out of this crypto rally. That's probably a good thing to have a couple of months of sideways market or up and down market. That the halving is it's psychological, right? It's actually becomes harder for the miners because the miners, basically their profit is now cut in half as well. And so some of the mining companies, there's a lot of money that is put into them, and then they're correlated with the market as well and push things forward. So it could be another one of the things in crypto where it is a sell the news event even further before things shake out. But I think we have it's not going to be the shortest bull market in history, but if there are some black swan things that happen, we could be in a, just a sideways market for a while, which I don't think is a terrible thing.
Fingers crossed. That is all I can do. Looking at the chart, it doesn't look good right now, but fingers crossed. Fingers crossed.
It's crypto. It's volatile, right? Like this is what we deal with.
This is what we all signed up for. Oh, fingers crossed, like I said, because I've tried not to even open any of my apps today. I've tried not to open any because I opened it yesterday, and what I saw, like, you know what? I think I'm just going to keep you eating for like the next 2 or 3 days.
You want to put all you could do is like put your weekly buy in on the weekend sometime on Bitcoin, and then you just, it's almost like your retirement account. You just open it up once a quarter. You say, hey, that's pretty cool. And then you get back to work.
Yeah. I think that's what I'm going to do. Going forward, that's what I'm going to do now. All right, so let's talk about mainstream adoption. Why do you think the disconnect still lies between the crypto and Web3 world and mainstream adoption, and how can we bridge that gap?
I think we're bridging it, right? Like I think, Bitcoin itself was the first killer app, right? Like a sovereign, like a money supply that is fixed, that can be utilized by anyone in the world, that is the, strongest network, 100% uptime, like systematic hedge against inflation in most countries, right? Like that's the killer app, right? That's where it starts. And I think that's where a lot of the mainstream adoption has already started, right? Like it brought you into the space, it brought me into the space. I think, it's like when we had the NFT, boom a couple of years ago, when that started, like that brought a lot of new people into the space as well. And maybe there's now people that the first entrance into the Web3 space was, I got an NBA Top Shot NFT, right? And I got a wallet for that. And hey, here's how blockchain works. And here's potentially how an address works. And so that brought even more people into the industry. And so I think it's just a thing that's, slow but sure, where, once you figure out what Bitcoin is and you figure out, maybe, hey, like I like to collect an NFT, or I want to join a meme coin community, so I'm going to buy $50 worth or whatever it is. Like those things just happen. And it's like the cat is out of the bag. And if you've got one person that's interested in cryptocurrency or interested in the space or is working in the space, it's unlike any other industry. Like these people, like, we can't stop talking about it to everyone. right? Like we're not like if we go out to you go out to dinner with your friends and they're like, hey, what's going on with you? You know, you're just going to talk about Bitcoin and crypto the whole time. Like that's what's going on, right? We're like, it's some sort of obsession that's out there where some other people, it's like, you know, if you work for in insurance, people say, hey, what's going on with you? You know, you're not going to be talking about insurance the whole time, right? You might be talking about something else. So I think there's just this kind of like natural word of mouth thing that continues to happen. And, you know, people go back, you know, around the holidays to their families and they talk about it and they just keep evangelizing this thing. And so, you know, mainstream adoption is just happening in the form of people understanding a new technology that works differently than the technologies that they're currently using. And so I think as that happens, as, you know, the boomers age out of the economy, right, like it's just going to become more ubiquitous. And so like for me, it's like, it's just happening, right? And then we're going to have some sort of killer app that at certain points spikes and brings more people in, like an NFT boom. You know, think about like, you know, Pokemon Go, when that came out, right? That introduced a lot of people into like what mixed reality or what AR was, right? Holding their phone up and then seeing something in the real world, right? People didn't know what that was too much before one app came out, and that app's now gone and not used anymore, but it doesn't mean that that technology is now, you know, gone as well. It's now understood and it kind of paved the way for bigger, brighter things. And so, you know, we're kind of, the way I think about it is always kind of like building in the backs of giants, right? And like, you know, this is why, you know, I think in the future, people won't even maybe understand at all. It's like the same thing as how you're interacting with the internet. You're not like thinking about the internet when you're using Instagram. You're just using Instagram and enjoying the content that you see on there, right? And so I think it's the same thing with Web3, where it's like, it's just going to weave its way into what happens. And the average consumer is not going to care that like your app is built on Solana, right? Just like they don't care that your app is built on AWS or Google Cloud, you know, or Azure. Like they just won't care.
Right. So I have a follow-up question. It's also a curious question. Do you think Bull Run is going to be consistent and last longer when more people get into the space? Because I know this means that more people are going to be investing and putting more money into this space.
Yeah, I mean, it definitely helps to have more retail folks come in or institutional folks come in and kind of go down the rabbit hole a little bit more than just Bitcoin. And so the more people that you've got, you know, that are kind of buying into what's going on, you know, yeah, you are definitely going to have a longer run. But, you know, I think right now it's just too early to tell with where things are at. And, you know, I don't see the sudden like inflow of buying on the ETF stopping anytime soon. And so I think like that's going to continue to drive this narrative through the halving. And then, you know, we're going to start to have some killer apps that come out in the summer.
Right. Fingers crossed. Again, we can only hope and wait to tell. And so let's talk about Web 2 and Web 3. How do you see, because someone who has worked both in Web 2 and Web 3, who has experience, work experience, and trading experience across both sectors, how do you see the relationship between Web 2 and Web 3 evolving, and what can each learn from the other?
I think, you know, the use case, you know, the UX in Web3 needs some work, right? Like a lot of things have been figured out in Web2, like specifically around onboarding, right? Like you've got apps where, you know, you just need an email address and now a passkey, right? And so it's very like simple, secure, and safe to be logging into these Web2 platforms. And people, you know, it's like with your wallet address, you know, it's like, man, do you really want to be connecting your entire bank account to like every app that you'd be using, right? Because that's kind of what connecting your wallet is, you know, if you've got a wallet and that's where a lot of your everything is stored, right? You've just got one wallet for that, and maybe you're not too savvy, or it's like, man, I got to create more wallets and then switch from wallet to wallet in order to connect to something. And then I got to send some gas, you know, from the wallet that has most of my stuff in it to the wallet that has less of my stuff in it, you know, just to use this one DApp that utilizes, you know, that I need gas for. Like these things become very cumbersome. And, you know, you've just got someone that's playing around a little bit. It's like, oh, maybe maybe their kid told them about a cool app that has like some sort of trading on it or some sort of like fantasy football thing or whatever else is going on. And suddenly it's like, I've got to figure out, I've either got to put my entire portfolio at risk by connecting it to this thing, or I've got to like figure out how to kind of send transactions, and those send transactions they cost me $15 to do. I think that's like very cumbersome in holding back a lot of use case for the industry where, Web2, you don't have a lot of those things, right? And it's like, you just connect up your credit card and you go. And some people are just okay with that, right? And there's a lot of trust. People have been paying for things with their credit card and the internet for a long time now. And so I think there's just this layer that needs to be abstracted out and needs to be simplified and smoothed out. And we're just not there yet. And I think once that gets really, really simple for people and really easy, then, and that's all taken care of by maybe a couple of different providers that are out there. It's like any Web2 company. It's like, hey, you could log in with Google, you can log in with Apple, you can mask your email. These things are amazing, and there's security that's now built into it, and people trust those companies because it's the phone that everything's built on. And so I think we've just got some work to do there. And, the rest of the infrastructure, though, around trust and having the decentralized nature of Web3s is already there. And so once the UX layer really gets figured out on onboarding, I think that, we really can take off and build some more cool stuff. And so I think in the Web3 space, that's inherently like what we have to learn from Web2, but it's difficult because that's kind of inherently the part that makes everything safe is to kind of control your own things. And, to like the more, it's like a natural pendulum of like the more trust you give up, the less security you have. And so it's like we have to find the happy medium of like maximum trust and maximum security and maximum ease of use.
Well, yeah, I actually think you're right on the complex part, because few people that I've spoken to in Web2, they're like, oh yeah, Web3 is too complex. There's just so many complex. I don't even understand how this works. How does this work? I try to sign up. I don't understand. The UX is just so confusing and whatnot. So I think we really need to work on that. So more people, because most people just want to sign up, like you said, just sign up, just put their email address and then they are in. They don't have to go through so many processes, have to do this or that. I think as we evolve, all these things will get easier, and we be able to get more people and be able to preach the gospel. I mean, it's one thing for us to preach the gospel. It's one thing for people to actually say, okay, guys, actually saying the right thing, and then I can join, and then it's not just so complex and whatnot. But yeah, I mean, yeah. So this is the third time I'm going to say fingers crossed on that again. We can only hope. We can only hope, and then hopefully things get better. I know things are going to get better because we are evolving. When Web3 over last 4 years, things have changed from 4 years ago, and definitely going to change in, let's say, 5 years more. Things are going to get easier for people and for users. So let's talk about your expertise in crypto insights. You're an expert in crypto insights. So what excites you most about the sector over the next, let's say, next 3 to 5 years, and why?
I think it's just the progress that we're going to see. You talked about things being, better now than they were before. I think, we'd be pinching ourselves if a couple of years ago we said that Wall Street has embraced Bitcoin at the level that they've embraced it, and that, Bitcoin, is one of the largest ETFs in Wall Street, right? Like that like the headlines, it's almost like you kind of get numb a little bit to the progress, like I couldn't even imagine that in 2015, right? Like that just would seem incredibly outrageous. And so, to be, less than 10 years from that moment to this moment, and how big of a deal that is, or, having like El Salvador, say that, you can pay for Bitcoin and that it's a currency, right? Like those things, like having countries adopting this thing, it's like, where are we 10 years from now, right? Like if those things would have completely blown our minds back then, what, happens, and the speed of this innovation is increasing. Could could our minds be blown 3 years from now or 5 years from now? Like, you have just tons of incredibly smart people building in this direction. It's going to keep growing. It's going to continue to be a bigger piece of the economy. So I'm just excited to see that, like, the progress has continued from those early days until now, which, you know, kind of means that the progress will probably continue from now into the future. And so that's really what I'm excited about, is just being a part of the industry, putting my head down, working really hard, and trying to contribute to that narrative.
Right? Cool. Super cool. We're both waiting for what's going to happen in the future. I'm waiting to see what the future has in store for us. So let us take a should I say, like, let us take a step into the past or take you to the past. If you could go back 6 years ago when starting LunarCrush, what's one piece of advice you give your former self?
I would probably, it's a great question. I mean, I would probably double down on something that I kind of was already thinking a little bit, just because going through a startup before, is just take it slow, right? And just understand that, you know, with a startup, you know, it's like every day of your life is like, could be like the best day and worst day of your life over and over again, right? Like, that's the way I kind of think about it. And so it's, you know, just take it slow and stay as calm as you can and work through the hard things. You know, just trust yourself that you're going to work through the hard problems and that things will be okay and that life will always move on. You know, I think, you know, sometimes you do get a little wrapped into, like, you know, oh my gosh, like, this is, yeah, could this thing fail? Like, this is the end of the world. And so I think I had that going into this, but it would be just really driving that home with myself that, you know, it's not always going to be easy, obviously, like, you know that, but like really driving that home to say, like, hey, you can't have the good days if you don't have the bad days, right? Not like that you need to have that juxtaposition of being present for all those things and to try and embrace those things. And, you know, if you need a moment off, take that moment off, and that's okay. But yeah, just really kind of driving home that, like, these are long journeys. And if you're going to be successful with a startup, it is going to be a long journey, and a lot of things aren't going to work. And then one day it's just going to work, and you just don't know when that's going to be, but you just have to have the wherewithal to never stop.
Why? So there you have it, guys. You can't have the good days without the bad days, especially if you're a startup founder and you're listening to this. It's a journey. And I say again, you can't have the good days without the bad days. Thank you so much, Joe, for an insightful and exciting conversation. It was so great learning about the decentralized world. And that wraps up today's episode of the Web3 Quick Bite podcast. We hope you enjoyed the discussion. And if you have any feedback or question, please reach out on social media or send us an email at web3quickbites@gmail.com. Thanks again to our guests for joining us. And thank you, listeners, for tuning in. We're back next week with more exciting content, so be sure to subscribe and tune in. Bye.